Let's talk about Tesla, the latest earnings call and the path to autonomous future. Keep in mind, we use the power of AI to create this video. More details on the screen right now and in the description.
Welcome to this deep dive into, well, the ever-interesting world of Tesla.
Indeed.
Today, we're going to unpack their Q1 2025 earnings, dig into the webcast commentary from Elon Musk and the team, and also look at some pretty significant news coming out of the U.S. government on self-driving cars.
Yeah, it's a lot to cover. We've got the financials from the report, the strategic vision from the executives on the call, and then this regulatory piece, which is just critical for where they want to go.
Okay, let's jump in. Our mission here is really to sift through all this and figure out, what are the big challenges? What are the opportunities facing Tesla right now?
Especially around self-driving, that's key.
Absolutely. But also production, the economy, these new rules, it all ties together. So where do we start?
Well, it's interesting how connected it all is, isn't it? The numbers, the talk, the government action. Maybe we kick off with that government news. It feels like it could have a really direct impact on their whole self-driving plan.
Sounds like a plan. So Transportation Secretary Sean Duffy unveiled this new federal framework. What's the main takeaway?
The big message seems to be the government wants to speed things up, promote autonomous driving.
Okay.
Duffy talked about safety, innovation, and actually getting these things deployed commercially. And interestingly, he framed it as a race with China to out-innovate.
Right. So there's a national strategy angle there.
Definitely.
And the idea is to cut red tape, move towards a national standard.
Exactly. That could be a massive help for companies like Tesla, a single set of rules instead of a patchwork state by state.
Yeah, that would provide some much needed clarity. Seems like the market liked it.
Oh, absolutely. Tesla stock jumped almost 10% on Friday after that news. It was already up on Thursday, too.
Wow.
That kind of reaction really tells you something, doesn't it?
It really does. It highlights how much weight the market puts on their self-driving tech and how important this kind of government backing is.
And it connects back to what Musk said, I think it was last April, about autonomy being essential for Tesla's value. This feels like a nod in that direction.
Okay, so a potential tailwind from the government side. Let's pivot now to Tesla's own performance. The Q1 earnings, the headlines there seemed a bit less positive.
That's fair. They missed estimates, both on earnings per share, 27 cents versus 39 expected, and on revenue, $19.34 billion instead of the $21.11 billion analysts were looking for.
And the automotive revenue, that took a hit.
A big one, down 20% compared to last year. Came in at $13 billion.
Ouch. And overall revenue down 9%. Net income way down too.
Yeah, net income plunged 71%, down to $409 million. It was a tough quarter financially.
What reasons did they give for that?
Well, a few main things. They pointed to the factory upgrades needed for the refreshed Model Y. That likely caused some downtime. Plus lower average selling prices and, using incentives to boost sales. Seems like they decided to do those factory changeovers globally all at once.
Right, which hits production in the short term.
Exactly. Short-term pain, potentially long-term gain, but it definitely impacted Q1 deliveries and financials.
Yep.
They talked about managing that cover successfully, though.
Okay. But they didn't promise growth for the full year, did they? They're holding off on guidance.
That's right. They said they'll revisit guidance in Q2. So, yeah, that signals some uncertainty about the immediate future.
Interesting how the stock reacted, though. Not much initially, then a jump after Trump's comments on the Fed.
Yeah, it just shows how external factors, even political commentary, can move these things. It's not always just about the earnings numbers themselves.
True. And in their shareholder communication, they mentioned instability in the auto and energy markets.
They cited changing trade policies, shifting political winds impacting supply chains and costs. It's a volatile world out there.
And deliveries were down, too.
Yeah, 13% lower than Q1 last year. About 336,000 vehicles delivered.
So lower deliveries, lower revenue, lower profit. It sounds like pressure from multiple directions.
I think so. Competition is heating up, especially from lower-cost EVs, particularly in China. And they admitted they're sort of lagging behind Waymo right now on the robotaxi deployment front here in the U.S.
But they did offer some positive updates on their big future bets, right? Autonomy and robots?
Yes, absolutely. They reaffirmed the Austin robotaxi pilot is still set for June.
Using Model Ys initially.
Correct. And they expect to start pilot production of the Optimus humanoid robot in Fremont later this year. Those are the big long-term drivers they keep pointing to.
Let's circle back to the financials for a sec. Operating income down 66%. That led to a really thin operating margin, just 2.1%. Why so low?
The main reason given was higher spending on AI projects. So big investments going into that core tech for self-driving and Optimus.
Okay.
And interestingly, without those environmental regulatory credits, which actually went up to $595 million, their auto sales would have been unprofitable in Q1.
Wow. So those credits are still really important for the bottom line right now.
Very much so.
But the energy side, generation and storage, that looks strong.
Yeah, really strong. Revenue jumped 67% to $2.73 billion. They link that to demand for grid stabilization, driven partly by, all the infrastructure needed for AI compute.
Interesting synergy there, but potential vulnerability too. Foreign suppliers, tariffs.
That's a definite concern they acknowledged. Rising tariffs could cause volatility, impact component supply, maybe even demand for energy products.
Yeah.
Ties back to those global uncertainties.
And Musk addressed tariffs on the call. What was his take?
He basically said Tesla is the least affected car company because of their localization efforts.
Right.
Personally, he said he favors predictable, lower tariffs, free trade, ideally. But, ultimately it's the president's decision.
Okay, a pragmatic view. Let's shift to Musk's own commentary on the webcast. He talked about his work with DOGE, the Department of Government Efficiency.
Yeah, he addressed that time commitment, said he felt it was important to tackle waste and fraud, help with the national debt, but he expects his involvement to ramp down from May, freeing up more time for Tesla.
Sounds like he saw it as a duty, but it's ending soon. He also pushed back hard against any idea that Tesla's in trouble, didn't he?
Oh, yeah. Dismissed any talk of a near-death experience. Very optimistic. Said the future is fundamentally about large-scale autonomy and humanoid robots.
And some classic Musk predictions about valuation.
Absolutely. Reiterated his belief that with good execution, Tesla will be the most valuable company in the world, potentially worth more than the next 5 combined.
That's ambitious.
To say the least. Huge belief in the tech they're building.
Did he give a timeline for when autonomy might start impacting the financials significantly?
He suggested around the middle of next year we'd start seeing a material impact, and then it would become exponential after that, which fits with the robotaxi rollout plans.
Okay. And he doubled down on that localization strategy to handle supply chain risks and tariffs.
Yep. Building stuff near their factories in North America, Europe, China. Repeated that claim about being least affected by tariffs because of it.
Now, the robotaxi versus cybercab thing, can you clarify that distinction he made?
Right. He explained that basically any autonomous Tesla, like a Model Y, can be robotic taxi.
Okay.
But the Cybercab is a specific, purpose-built vehicle designed for ride-hailing.
Gotcha. And pilot builds for that are starting soon.
End of Q2 is the plan, with production starting next year at Giga Texas.
And their whole approach to autonomy is about a general solution, not city-specific maps.
Exactly. Develop one core AI system that can learn and adapt, and then get regulatory approval to deploy it broadly. Less reliance on hyper-detailed maps and expensive sensors, ideally.
What about Optimus, the robot? Any more detail on progress?
He said good progress, aiming for thousands of them working in Tesla factories by the end of this year.
Thousands. This year.
That's what he said. And then scaling to millions within like 4 or 5 years, so 2029, 2030.
Wow. Okay. Very fast timeline. And the Megapack business. Still growing fast.
Seems so. Scaling well. He mentioned gigawatt-class factory orders are becoming common. The ultimate goal is terawatt scale. Huge potential there.
He also explained why Q1 tends to be tricky for them.
Just typically the slowest quarter. Said they chose it strategically for that global Model Y production changeover, and that it was managed successfully.
And he wrapped up with that vision of, what was it? Sustainable abundance for all.
Yeah, driven by AI-powered robots.
Yeah.
Framing their work in that bigger picture context.
All right, let's dive into the Q&A part of the call. Updates on robotaxi and FSD. Austin launch still on for June with Model Ys.
That's the plan.
Huh.
And they want to expand to, quote, many other U.S. cities by the end of this year, expecting rapid scaling once it starts.
Interesting. And sounded like they're maybe leaning more towards tailoring the AI for different regions?
Yeah, there was talk about needing localized parameter sets, like for snowy weather versus sunny California. The analogy was a driver skilled in one place might struggle in another, so the AI might need regional tuning.
That makes intuitive sense. They also talked about validating safety, calling it a long-tail problem.
Right. Meaning there are tons of rare but critical edge cases the system has to handle. They stressed using advanced simulation, even generating synthetic video with neural nets to test these things, not just relying on miles driven.
And the purpose-built Cybercab pilot build still on track for end of Q2.
Yep, pilot builds end of Q2, production next year at Giga Texas. Seems on schedule.
What about FSD for personal cars? The unsupervised version.
The goal is studies later this year in the U.S. Big emphasis on safety, needing to be meaningfully safer than a human. Musk's acid test was being able to sleep on the way to your destination.
Okay, that's the benchmark. Let's talk affordable models. Still planned for this year.
Yes, still planned, but maybe a slightly slower ramp due to some last-minute issues. The main focus seems to be using existing factory lines fully.
Right, maximizing current capacity.
And focusing on low cost of ownership, like the monthly payment. These new models will fit within current production constraints.
How do they see the competition with Waymo in the robotaxi space?
Musk highlighted Waymo's high vehicle cost and lower production volume as disadvantages. And he really pushed Tesla's pure vision AI approach versus Waymo's expensive sensor suite. Lots of confidence in their own AI software and hardware built from scratch.
And he thinks Tesla could get huge market share because of their scale.
Potentially very high, yeah.
Yeah.
Because they're both the software AI developer and the car manufacturer at massive scale.
Interesting point.
He even mentioned current Model Ys driving themselves around the factory, suggesting autonomous delivery to customers might even happen later this year.
That would be something. Okay, the unboxed manufacturing method. That's for the Cybercab.
Primarily, yes. The whole point is low cost, high automation. It's about joining big sub-assemblies precisely.
What are the challenges there?
Things like handling corrosion on uncoated aluminum, getting good seals, crash testing. They'll get a big test with the Cybercab builds end of this quarter.
Sounds revolutionary if they pull it off. Cycle time of 5 seconds.
That's the future goal for optimized factories, yeah. And maybe parts of it could be used on existing lines too.
How are they dealing with all the global economic risks? Tariffs, politics.
Line's strategy is that regional supply chain approach.
Yeah.
Sourcing parts near the factories in North America, Berlin, Shanghai. They said they already have high local content for high-volume cars. This strategy started pre-pandemic but got accelerated. Diversifying suppliers, more vertical integration, using analytics, local partnerships, all about resilience.
And they are pretty vertically integrated, especially on batteries.
Very. Musk talked about their U.S. lithium and cathode refineries, aiming for the biggest lithium refinery outside China.
Wow.
Plus, multi-sourcing every part, ideally from 2 countries, and insourcing critical battery stuff like lithium and cathode. They claim their cell production is lowest cost per kilowatt in North America right now.
What are the big advantages they see from doing all this?
Less cash tied up in transit, more resilience to port disruptions or politics, just more supply chain flexibility overall.
Yeah.
They know they can't make everything regional, like some semiconductors, but they work closely with partners there. Hold buffer stocks.
Gotcha. And battery supply itself. Any constraints for cars right now?
They said no, currently not constrained, thanks to expanding U.S. production with vendors, their own 4680 program, and bringing the upstream supply chain here.
But tariffs are hitting the energy business.
Posing challenges, yes.
Yeah.
But they say they have plans to resolve them, alternative sourcing, maybe more in-house LFP battery production.
Okay. What about customer demand? Any impact from negative press?
Well, they pointed out Tesla was still the best-selling car overall in California in Q1, not just EV.
Interesting stat.
And record test drives globally, so they think underlying interest is still high. Macro demand for cars is a factor, of course, but they feel the interest is there. Affordability remains key.
Right. Let's quickly touch on Optimus again, tariffs impacting its components.
Well, it's still development, not mass production. Almost everything is new, no existing supply chain. So the ramp is tricky, limited by the slowest part. The China rare earth magnet export license issue for the ARM actuators was mentioned as a specific challenge they're working through, stressing non-military use.
Okay. And FSD pricing. If it becomes truly unsupervised...
They're thinking about different price tiers, suggesting the current $99 a month supervised subscription might be too cheap for what unsupervised could offer.
Makes sense. Value goes way up if you can actually sleep.
Exactly. That's the profound value shift they see.
Any update on India entry?
Still working on it.
Right.
Called it a very hot market, big middle class,
Yeah.
but huge tariff challenges like 70% plus 30% luxury tax. So they're being careful about timing and strategy to deal with that price sensitivity.
Gotcha. And the vision-only camera tech? Any more detail?
They mentioned using a direct photon count, bypassing the normal image processor, claimed it gives better visibility in glare, dark, fog.
Interesting. Okay, final point. Musk on tariffs generally.
He's previously suggested maybe a slow ramp in tariffs could help industries adjust. Now seems to favor predictable, lower tariffs generally, but acknowledges they might be needed to counter unfair practices or huge subsidies elsewhere. He did raise drone manufacturing as a critical national security issue, saying the U.S. depends on China there, and China's ahead.
In robotics.
Confident Tesla leads in humanoids now, but worried about Chinese companies potentially dominating after that.
Right. Okay, so let's try and wrap this all up. It's definitely a complex picture for Tesla right now.
For sure. They're juggling these big production changes, economic pressures, shifting regulations,
Yeah.
all while pouring resources into these massive bets on autonomy and robots.
Yeah. Q1 was rough financially, no doubt. But the leadership sounds incredibly optimistic about the future, pinning hopes on that tech and getting costs down.
Mm-hmm. And that government support for autonomous vehicles, plus their own progress on FSD and manufacturing, it does feel like things could be entering a really transformative phase.
It really could. They're investing heavily in tech that could genuinely change transportation, manufacturing.
Right.
How it all plays out with regulations and the economy will be fascinating to watch.
Absolutely critical interplay there.
So here's something to leave you thinking about. If Tesla really does make the progress they're aiming for in AI and robotics, and you factor in the whole geopolitical situation, what if Musk is right? What if Tesla does become vastly more valuable than even the biggest companies today, maybe combined, in just a few years?
It's a mind-boggling thought.
What does that mean for society, for the economy, for transportation, manufacturing, even, the global balance of power? It certainly raises some huge questions about the future, doesn't it? Something to ponder. Thanks for joining us for this deep dive.